$160 billion erased from the crypto market in just days. Bitcoin slips under 111K. Ethereum dives below 4K, and yet Tether might soon be valued at $500 billion. What on earth is going on in crypto right now? Let's break it all down. Hey everybody, welcome back to the channel. It's me, your daily crypto wrap-up, where I give you all the day's news stories. We've got a lot to cover today, so let's not waste any more time and jump right into it. The last few days have been nothing short of a roller coaster. Investors are waking up to red charts, panic headlines, and global uncertainty. But behind the short-term fear, there are moves happening that could shape the next decade of digital assets. Let's start with the bad news. A perfect storm of liquidity stress has once again gripped markets. Crypto is down $160 billion in just 3 days, with Bitcoin tumbling to its lowest level since January and Ethereum breaking below the crucial $4,000 level. So why are prices dropping so aggressively? Well, analysts point to several factors, including macro fears, such as talk of a possible U.S. government shutdown and rate expectations after the Fed's latest cut, as well as supply pressures due to big token unlocks like Arbit. Nevertheless, despite the market turmoil, some significant developments are laying the groundwork for a long-term recovery. So first story of the day, let's take a look at the current state of the market. The global crypto market cap has fallen to $1.85 trillion. Bitcoin is trading at around $109,000. Losing more than 2% in the last 24 hours. Ethereum is also slipping below the $4,000 mark, representing a 3.5% decline in the last day. XRP is slightly outperforming its peers, gaining 0.5% and trading at 92 cents. Cardano is also holding up relatively well compared to the broader market, remaining flat over the past day and trading at $3.50. Meanwhile, meme coins, Dogecoin and Shiba Inu are among the hardest hit, with Dogecoin plunging nearly 5% and Shiba Inu falling almost 6% in the last day. The top gainers of the day include Quant, Mina, and Audio. Now looking at the top 100 coins, you can see that most are in the red. However, the majority of the losses are relatively minor, with only a handful of coins dropping by more than 5. Standout performers include Basic Attention Token, Cosmos, and Helium Network, which are up between 8 to 10%. Now let's shift our attention to the biggest mover of the day, Arbitrum. The altcoin is facing a correction of over 17% after its airdrop distribution concluded earlier this week. This highlights a common challenge for projects following their airdrops, balancing excitement with responsible market practices. As the dust settles on Arbitrum's airdrop, the community will likely focus on building and delivering on the project's ambitious plans to drive long-term value and adoption. Next up, let's discuss the elephant in the room, the mega funding round. According to reports, Tether is targeting a massive fundraising round that could value the company behind the USDT stablecoin at a staggering $500 billion. SoftBank and ARK Invest are reportedly among the investors in talks to buy a 3% stake in the firm for $15 to $20 billion. This would place Tether on par with some of the world's largest banks in terms of valuation. So why is Tether seeking such a high valuation? Well, the company believes it deserves the title of the world's largest bank based on its size and reach. With over 100 billion USDT in circulation, Tether is aiming to expand its operations and product offerings with the infusion of fresh capital. The funds raised will reportedly be used to boost compliance efforts and invest in other crypto ventures. The funding round reflects the growing legitimacy and mainstream appeal of digital assets and stablecoins. Specifically, if completed at the higher end of its valuation range, Tether could become the largest bank globally. And the interest from heavyweight investors like SoftBank and ARK Invest underscores the confidence in the company's future prospects. However, critics argue that Tether's valuation is inflated and unsustainable. Some experts question the true backing of USDT and the company's ability to maintain its value peg to the US dollar. Concerns over Tether's transparency and accounting practices have persisted for years, with allegations of the company misusing customer funds. Next up, let's talk about the FUD surrounding Tether's USDT. Amidst the recent market turmoil, questions have been raised about the collateral backing Tether's USDT. However, Tether has responded by publishing a list of its top 10 holdings, providing further insight into its reserves. Commercial paper makes up the majority of Tether's holdings at 53.6%, followed by corporate bonds at 22.6% and cash equivalents at 17.4%. These disclosures aim to enhance transparency and reassure users about the safety of USDT. Additionally, Tether has announced plans to increase its holdings of government bonds and treasury bills in a move to reduce counterparty risk and further strengthen its reserve backing. It remains to be seen whether these measures will alleviate ongoing concerns regarding the stability and backing of USDT. Now let's turn to Bitcoin and Ethereum. two of the largest cryptocurrencies by market capitalization. Bitcoin is currently trading at around $47,000 after experiencing a slight decrease of 1.35% in the last 24 hours. On-chain data suggests that despite the price fluctuations, Bitcoin's long-term fundamentals remain strong, with metrics like the hash ribbon highlighting the network's resilience. However, others argue that Bitcoin's correlation with the stock market, particularly the tech-heavy Nasdaq index, indicates that it may continue to be affected by broader macroeconomic trends. For Ethereum, it's a similar story. The cryptocurrency is trading at around $3,800, following a 1.87% decrease in the last day. Optimism surrounding Ethereum's upcoming Shanghai upgrade is countered by concerns over the potential impact of a wave of ETH leaving the network due to the unlock of approximately 1.5 million ETH worth around $6 billion. The interplay between these factors is likely to influence Ethereum's price action in the near term. Finally, we'll shift our focus to Litecoin, a peer-to-peer digital currency that offers faster transaction speeds than Bitcoin. Litecoin is currently trading at around $81 after increasing by 3.77% in the last day. The cryptocurrency is seeing renewed interest as it approaches its next halving event scheduled for August 2023. The halving event, which reduces the rate of new LTC entering circulation, is expected to tighten supply and potentially boost its price. As the date draws nearer, Litecoin's price action will likely be influenced by investor anticipation and speculation surrounding the event. In conclusion, the crypto market is experiencing a period of turbulence with Bitcoin and Ethereum taking hits while Tether makes moves to solidify its position in the space. Understanding the interplay of factors driving these price movements and developments is crucial for navigating this evolving landscape. Whether it's regulatory changes, technological advancements, or macroeconomic trends, staying informed will help investors make better decisions. As always, stay tuned for the latest updates. See you tomorrow.